Now we will show drawings with defined all major points and levels which are important for determination of patterns, entry level in the positions, and defining the levels of risk and expected profits. All these drawings show the rules of our trading strategy. In addition to this video, you will receive material in the format of images and you can use them as a reminder during your trade if you decide to try trading strategy with harmonic patterns, of course. Now let's move on to the first image. We will explain the rules for trading with bullish Gartley pattern. First thing we note are these higher peaks which are formed. These higher peaks indicate a growing trend. This means that we make trade in the trend direction. So when the bullish Gartley pattern that gives a signal for buy finds in a growing trend, we are entering into buy position. If the bullish Gartley pattern, such as shown in the picture, found in a downtrend, we will skip that trade. So the first rule is trading in direction with the trend. In the growing trend, we make entry into buy position. In the downtrend, we make entry into sell position. As a trend, we do not have to enter the position only in very strong trends. It is enough to appear some higher peaks that represent some short-term trend or the correction of the main trend. Of course, the chances of success are greater if the pattern is formed in a strong trend. How do we notice bullish Gartley pattern? Just visually, as well as any other pattern. The pattern consists of 4 waves. After the formation of the third wave, we can expect that it will form some of the harmonic patterns. If the point C does not exceed the level of point A, we know that it is or Gartley or the bat pattern. If it exceeds the level of point A, it can be formed shark or cyper pattern. In order to clearly determine the pattern, we use the Fibonacci tool and measure the retracement and extension, and on the basis of these measures, we defined patterns, the level of entering into position, stop loss, and take profits. The most critical point of Gartley pattern is the first return, point B. This retracement should be happen exactly at the level of 61.8 Fibo retracement of wave XA. No big deal if there is a deviation of few pips, but should not be more. Another important point for defining the Gartley pattern is point C, which has a range of movement between 38.2 and 88.6 Fibo retracement from wave AB. The most ideal retracement is at the level of 61.8%. Point D represents the level of entry into position. It can be determined in 2 ways. The first way is to simply measure the Fibo retracement of 78.6 of the wave XA, mark that level, and on that level make entry into the position. Another way is to measure a length of wave AB and replace it with wave CD. The end of wave CD, or point D, is level of entering into position. When the wave BC is slightly longer, in this situation, this level will coincide with a level of 78.6. And when a wave BC is shorter, the level of entering into position will be slightly below the level of 78.6. After determining the level of entering into position, the next thing we do is determine the level of stop loss. Stop loss when it comes to Gartley pattern is set at the level of 1.13 Fibo extension of wave XA. So it is slightly below the point X. As for the take profit, always stand it to be at least 2 times higher than the risk. So if the stop loss is 30 pips, we set take profit at a minimum 60 pips. But take profit is not fixed and we move it if price goes in the desired direction. So we use trailing stop. How we do it? Like this. If our stop loss is at 30 pips, we set take profit at 60 pips. If the price moves in our direction and rises for 30 pips, then we will move the stop loss at 0 level and we will have trade without risk. If the price continues to rise and reaches the level of 60 pips, we have two options. The first is that at this level we close the trade. We do it if we find some important resistance at this level or if our fundamental is not on our side. Another option is if we believe that the price will continue to rise, we simply move the take profit for 30 pips up and move the stop loss to plus 30 pips. In that way, we ensure 30 pips profit and we expect 19 pips. And we just continue with the movement until we find any significant resistance or the price itself returns and close our position with a certain profit. As for the risk per trade, we always use 1% of the total account and this applies to each pattern. What level of risk you will use depends on you, but our recommendation is to not risk more than 3% if you plan to use this trading strategy. Another important thing in our strategy are pending orders. We have explained them in the basic module, so we will not repeat them now. Let's just say that we never wait that the price falls to a level of point D, but before forming of point D, we set pending order with stop loss and take profits and let the market do the rest. If the price reaches the level of entering into position, the platform will automatically open a trade. If the price does not reach our level and continue in the opposite direction, the position will not be activated and later we can cancel the pending order. After the bullish Gartley, now we will explain bearish Gartley pattern. Concerning trade rules, they are the same as the bullish Gartley pattern, except that now the situation is reversed. The lower bottoms on the side indicate that this pattern is only played in a downtrend, while the bearish Gartley pattern would be skipped in the growing trend. This pattern provides a signal for short. It is marked with 5 essential points, of which is the most critical point B. The return is expected at almost exactly 61.8 Fibo retracement of wave XA. Wave BC has a range of movement from 38.2 to 88.6 Fibo retracement of AB wave, and the entry into position is made at the point D, which is located at the 78.6 Fibo retracement of wave XA. In this particular case, it would mean that we would set a sell limit order at the level of 78.6 before the price came here and waited for the price to hit the required level and activates the position. As we said, stop loss we set at 1.13 Fibo extension of wave XA and we move take profit with movements of price or set it at minimum 2 times bigger level compared to the stop loss. This would be all as far as the basic rules for trading with the Gartley pattern according to our strategy. Now we move on to the next drawings and explain in detail the trade rules with the following patterns that we use in our trading, and this is the bat pattern.